Okay, so entry triggers. So this is, we already spoke about the break and retest of the entry, but now we're going to talk about sort of entry triggers and how we sort of justify ourselves taking a move. Okay, now we already know that the market moves in waves, all right, and we're trying to catch it at these waves. We're trying to catch it here. Okay, uptrend we're trying to catch it at the bottom, downtrend we're trying to catch it at the top, and this is the impulse to correction. Now, this entry triggers I'm going to show you basically describes the situation going on in these little areas. Okay, so it's not so much when to take an entry, but to work out if the right move or if the impulse is going to continue after the correction. Okay, now what do I mean by that? So obviously you scroll down to your lower time frame, your entry time frame, whether it be 5 minute, 15 minute, doesn't really matter. And you have these 4 criteria that needs to be met in order for this correction to be finished and the impulse to continue. Okay, you need 4 things to be met. So first thing is strong momentum. Now that means strong momentum in the opposite way. So if I'm trying to sell something, right? Let's say we have a break and retest at this structure. So everything I'm showing you right now is at this level here. Okay, this is your bigger time frame. This is the entry time frame. So let's say you have strong momentum coming towards our level. So your strong momentum, that's good, is what we want to see. We don't want to see, this is a level. We don't want to see this stuff at the level. That's just a consolidation. That's not strong momentum. Okay, that's just moving around for too long. And then if it does do that, if it does give that consolidation, then we go back to our break and retest entry and we try to catch a break of structure. That's a good way to do it. Okay. Now, if we get strong triggers, so we get strong momentum up to the zone, what we need to see is exhaustion. So second price gets to the zone, we'll normally do wick rejections like this. You might do some wick rejections, some move around a bit, just some basic stuff like that, because it's slowed down. The big move is slowed down and it's exhausted. It's stopped in its tracks, okay? And then what we need to do is we need to see indecision. So an indecision candle is what we call this doji candle with, even wicks and, a small body. Basically working out where price is going to go next, okay? So we got a strong move up. We have some exhaustion. The price has slowed down. We have some indecision, and those are the first 3 steps. And the last step is momentum again, but this time to the downside. So we need to see, some big momentum to the downside, indicating to us that this situation has really happened. The correction has been over, and the impulse has begun. Okay, and then once we see the candle close with the big momentum, we take the trade to sell here, stop loss above structure. This is a story of the impulse and the lower highs, the higher highs being formed. When it gets to a key level, because it doesn't always, if it consolidates like this is when we take a break and retest of structure and we catch a trade like this. But if it doesn't do this, and we're looking for these entry triggers to really tell us, to explain to us and tell us what the market is doing and whether an impulse is coming and whether a correction is over. Okay, and these you normally see these on the smaller time frames, but you also do see them on the bigger time frames too. Okay, so let me show you exactly what this looks like. Obviously, it's a market, so it's never picture perfect. This is what I'm trying to say, all right? So, if we're having these, if I'm trying to catch a sell, let's say I'm trying to catch a sell at this point in time, right? This is the move happening like this, okay? Obviously, I don't see that if the market's moving. This is because I'm going back now, so I'm seeing what's already happened. But I'm trying to work out what isn't happening or what's happening live. It's going to look like this, okay? So we've got, a strong move up, momentum to the upside. We have some exhaustion, okay, where price has just made some wick rejections, stayed in the same area, hasn't really done much. And then we have, an indecision where we have, a candle that really just evenly balance each other out. Sellers are 50-50. That's what it's saying. Strong move up, indecision, sellers 50-50. In order for me to take the trade, I need to see momentum kick in. So I need to say this momentum candle to kick in and then bang, take the trade once it's all that momentum, okay? Strong move up, indecision, strong move up, exhaustion, indecision, and then bang, momentum. Okay. Let's have a look at some more examples. So this is usually, whenever you try to take a trade, you want to try to follow the trend, catch the impulse, catch the correction, and you do this by just simply, trying to wait for price to come to a level, have a strong move up, a bit of indecision, a bit of exhaustion, and then bang, momentum, strong move down. Okay. Maybe this one. It just depends. Like if it's going to move around, it also works for trying to go up too. So if price is going to move around that level, then you sort of need to think to yourself, well, maybe this isn't, it isn't going to be a big push, because if it consolidates, then we're not really getting anywhere. We sort of want to see a big push. So, you know, even something like this is a good example because this is not clear. It's really hard to understand, but think of it like this, right? If price is moving up, okay, we have a strong push to the upside. Then we have what we call indecision and exhaustion, where prices just slow down and trying to work out where to go next. Then we've got momentum, and we take the trade after momentum has been seen. That 4 steps is the opportunity for you to understand that, okay, price is finished, you know, making this lower low. Stuff like that, okay? Yet again, it's never perfect, but I'm not going to show you what's perfect. I'm going to show what the market does. So an opportunity for it to buy, you know, yeah, this could be like 1-2. So a big move down, you know, exhaustion, indecision phase. You know, these are beautiful indecision candles. Another indecision candle here, and then bang, strong momentum, and enter the end of momentum. And on a higher time frame, that would be that correction finishing. Okay, strong move up. Now I hope you guys are getting it. I hope that makes sense. You know, don't overcomplicate it. Just always try to see, you know, if you're trying to wait for a move, trying to wait for an entry, you can really just catch, you know, this is a break and retest entry. Ignore that line, sorry guys, it's one of my trades. But, you know, this is pretty much the story of what's going on when price gets to those key levels. Strong move up, you know, sort of indecision, exhaustion, you know, that's a beautiful indecision candle. And then bang, momentum of structure, you know, bang, momentum of structure. That's pretty much it. Another one here at the bottom, you know, a strong move down, you know, a bit of, you know, exhaustion, so wick rejections, just, you know, price moving around, you know, indecision, so price working out where to go next. Pretty even doji candles, and bang, momentum, take the trade, and you continue it up to the next key level. You know, your trade will look like this, and you're laughing. Simple stuff, okay? That's the best way to do it. So remember those 4 little checklists in order to understand when the impulse is over and when the trade is over. Okay, that's going to work for you best.